Ladies and gentlemen, good morning and welcome to RDC's Properties Limited Unaudited Financial Result Presentation for the period ending 30th of June 2022. I'm pleased to see that few of our directors have joined us and our auditors. Thank you for joining. I will welcome everybody maybe after a brief film. We'll, as people, to give time to all our guests to join, we have prepared a few minutes, 5 minutes little presentation of RDC that would give us the time to then welcome everybody. Avi, thank you.
The RDC Properties was given birth to in, I think it was in 1992.
The business was established by Mr. Jaketi. It was listed on the Botswana Stock Exchange. So it has a long history of trading in the formal sector. It was actually the first property company ever listed on the stock exchange and has since grown to be, by portfolio value, to be the largest as well. I'm the joint CEO of the RDC Property Group, and I look after the property side of the business, but essentially largely steered by Mr. Jaketi's vision and his drive to create a business that owns and manages properties that add value to the communities in which we serve. Very important and certainly goes to the heart of who RDC is this idea of adding value to communities that we operate within. We look for ways to give back within the education sphere. An example would be our investment into the Ngwapa primary school. We clearly support the arts. This is now an ability for us to showcase particularly emerging artists that are coming onto the scene, and every 6 months or so we redo the hotel with artwork from local artists. We also support women empowerment. This is evident even through the makeup of our board, which is 45% women and all the way down through the organization. If you had to look at its sectorial breakdown, we're roughly 45% office, roughly 35% retail, and then 10% hospitality, and the balance will be made up in industrial and residential. So what is it? It's a well-balanced portfolio. The acquisition of the tower portfolio increased our total property value by some 153% and our net asset value by more than 100%. So it was a significant acquisition for us, and in a sense brought on a new era in the evolution of the RDC business. The original founders of Tower were also people that had established the Green Building Council of South Africa, so we were well aware of the green slant within the Tower portfolio. And have since built on that. And with that we had to put in additional governance structures. One of them was formerly an ESG committee, and this operates and provides oversight for the work that has already been ongoing within that space within RDC for some years now. Speaking about the Radisson, our partnership there is with a women's black empowerment group that supports underprivileged children, and we're very proud of that partnership.
We've seen the portfolio move from Botswana to a balanced portfolio geographically and global-wise. In Botswana, per se, we own one of the first use properties in the then new CBD that came into life the property came into life in 2012, and it plays host to an international brand, Protea by Marriott Hotel. I can't go on without mentioning Matsosa Onwao, which is a small dance group that we have nurtured over time in one of our lodges in Kasane, Chobe Marina Lodge. It gave the youths an avenue to show these foreign and local visitors what they're made of, what Botswana is made of.
So it's really about, it is my community that completes me. And I think that ties in quite nicely with how we feel about our community. I am because we are.
Thank you. With these words of encouragement, I would like to thank all the participants to this meeting, and I would like to recognize the presence of a few of our non-executive directors, Giorgio Giachetti, Lesang Mahang, and Federica Giachetti, who is joining us. I'd like to thank Ashwin from our auditors, and I see we have few of our investors that are participant for a long time to our presentation. If there is some few things that you would have heard in the past already, I apologize for that, but I think this is for us a very exciting time, and I would like to welcome everybody to a new RDC. Avi, maybe you can. Avi will assist us in being on the background, going through the slides. So you might hear Avi called upon every now and then. You can go on, please, Avi. RDC as I will go through the presentation with some introduction, some highlights, and we suggest that we will have a Q&A session towards the end of the presentation. This Q&A session, if you have questions, please don't hesitate typing them for everybody to read. We'll be very happy to answer them in priority, and then if not, feel free to keep them for the end of the session. RDC in 2022 is representing Botswana as an investor in many countries, as we are very proud to be present in South Africa in a big way, in Croatia, a little investment in the United States, Mozambique and Madagascar, some projects in Namibia, but nothing significant at this stage. As you can see, our footprint has widened very extensively, and this was actually done with the help of the BSC in the last few years, with the equity that we could raise through the rights issue we did last year, and the support of the BSC for the listing of some bonds to finance some of these acquisitions. I must say we've been a good partner to the BSC, and the BSC have been a good partner to us, and the investors community has really supported us, and this has seen a complete change of RDC in the last few years, and we have an external asset management team that dedicated its time to asset managing the coordination, for example, of the M&A, overseeing all the developments, overseeing all the property portfolio, and checking that all the constituent of this group of companies contribute to the adding value to the shareholders of RDC. I will leave it to Gary to please go through the portfolio. Thank you, Gary.
Thanks very much, Mr. Chair, and good morning, ladies and gentlemen. It's great to be with you this morning. As you have already seen, RDC today has more than 50% of its assets domiciled in South Africa, which, as we know, is one of Africa's largest economies. Some of our key properties in South Africa include, of course, the new Radisson Red Hotel in the vibrant precinct of Johannesburg. This extraordinary designer hotel has been featured quite a bit in our past presentations, and we'll provide a short update in the next few slides. We also have the Cape Quarter precinct featured here in these photographs, which comprises the square and the old Cape Quarter. The name old is something of an anomaly, as the old Cape Quarter is currently the site of a newly developed multi-use environment, including 55 luxury apartments, and some 3,600 squares of retail and another 1,600 of commercial. So together with the Cape Quarter Square, which is a further 22,000 squares of mixed use, the Cape Quarter precinct dominates the area in Greenpoint where it is situated in Cape Town. Also featured below is the 5-star green rated Edge building at the Tiger Valley waterfront. This prestigious property is well let to blue chip tenants and is a landmark of architectural excellence and functionality in the precinct, and it delivers premium grade corporate accommodation. Just down the road from the Edge in the Durbanville CBD is the DeVille Shopping Centre, which is a 13,500 square meter centre in the heart of the Durbanville CBD, and that's anchored by Pick n Pay and Virgin Active. The Sunclair building in Claremont, featured just in that little thumbnail in your lower right-hand side, is in Cape Town in Claremont. It's a Class A commercial office building. It's also the home of the RDC offices. It's where I'm currently sitting, and it sits at the heart of what is arguably one of the most successful decentralized nodes in South Africa. I'll hand over to my colleague Jacopo Pari just to update you briefly on the Radisson Hotel.
Thank you very much, Gary, and good morning, ladies and gentlemen, and welcome again. A brief update on the successful opening of Radisson Red. This hotel has won an award from a company that recognizes excellence in hospitality, architecture, interior design, and guest experience on a global scale. And this was announced on the 10th of May. And was to us the recognition of the efforts that we have put into bringing to the community of Rosebank and Johannesburg at large, and all our patrons, a real complete new brand from an art point of view. It in fact has the vibe of youth, the vibe of being bold, the vibe of music and art and fashion. And it's noticeable that on the 3rd of September, we have changed the, as Gary was mentioning before in the presentation, we have changed the art that we were featuring in our communal areas. And we are now have introduced Zanele Muholi, that is really a world-renowned artist and has attracted a lot of accolades and a lot of interest in the hotel. Going to some factual basis, not only we have established ourselves as a presence and as a place to be, and we are topping all the social media, also thanks to the Wings of Usha that are featuring basically our entrance. We are also growing in terms of occupancies and in terms of rates, exceeding the budget and hitting already on the 70%, close to the 70% occupancy, with rates that are in line with the budget. So yeah, this shows that the good design, a good vision, and the right product can thrive also in difficult periods. Thank you. Over to you, Gary.
Thanks, Jacopo. And this depicts a couple of our major assets in Botswana. Botswana is of course home to RDC, and whilst the company has recently diversified well beyond its borders, RDC's roots remain firmly planted in Botswana soil. So clearly the dominant asset in Botswana is the 27,000 square iconic Massa Square and hotel complex. This mixed-use property is well known to local Botswana residents and is quite considerably the largest single property in the entire portfolio, both in size and asset value, and is situated in the Gaborone CBD. The hotel is operated by the Protea by Marriott Group, and whilst hospitality is slowly rebounding, it's important to note that the hotel operation is expected to meet its rental obligations to RDC, the property business. Likewise, the 66 chalet Chobe Marina Lodge on the banks of the Chobe River in Kasane has seen a slow rebound of business and leisure travel after a very tough trading environment through the various waves and variants of COVID-19, and aided by a recent revitalization of the lodge, the occupancies now continue to grow. Also featured there is the Standard Chartered building, which is a modern multi-tenanted 6,500 square meter office building anchored by Standard Chartered themselves and located in the main mall area of Gaborone. It's an established part of the core portfolio of RDC for many years now. What we have featured here is of course, the Croatian portfolio, and along with the acquisition of Tower, RDC acquired 4 high-quality assets in Croatia. This 82 million euro portfolio is fully let, and it comprises the landmark VMD Towers complex, which was completed in 2014 and is situated in the heart of the capital city of Zagreb. Our partners in this property is the VMD Group, the original developers, and one of Croatia's preeminent developers. I think together with VMD, RDC own 15 of the 25-floor high-rise complex. Included in the Zagreb portfolio is a retail shopping center anchored by the Konzum Group, and the property in the upper left picture is the 2-building Yazaki complex. Yazaki is one of the world's largest manufacturer of automotive parts, and this is their European R&D facility. The 4th property is situated in the popular destination of Dubrovnik, and at some 11,000 square meters of retail offering is the largest shopping center along the Dalmatia coast, also anchored by Konzum. Both retail centers, in fact, are furthermore secured by Konzum under a head lease agreement. Croatia will, in fact, become the full member of the EU on the 1st of January and will migrate from its local currency to the euro, a move which is expected to bring further economic prosperity to the region. That's back to you, Jacopo.
Thank you very much, Gary. Thank you for a very exhaustive presentation of our assets. 2022 has started with the Omicron outbreak, and that has hampered in this part of the world a little bit the recovery that it's strong elsewhere. But we can't be blind to the challenges that are facing the global markets, the economy, and even the geopolitical tensions that we have. Inflation and interest rates are on the growth. We have seen situations even in the old Europe where inflation has gone beyond the expectations of the banks. I'm talking about UK, I'm talking about even the ECB. And these are the challenges that we have to face. Our portfolio for now seems to be very, very, very resilient. And maybe this is also due to our response to it. Our interest rate is hedged to a large extent in our debt, and we have a number of leases that are linked to the CPI. So basically, it would protect the shareholders' value, both in terms of revenue and valuations. We are busy, and we will give you more details in the following slides, in rethinking the asset used in order to maximize the long term. And we are balancing growth, which has basically been our trademark, with a value strategy given the circumstances. So we are selling properties. This is going to reduction of the debt. And in this manner, we are also realizing the bargain gain purchase, which we have made at the time of acquiring Tower. I think that one of the instruments that we are using, it's our corporate governance. We have created a new board virtually because it's, as mentioned before, it has grown and has added value and skills. And we have introduced the subcommittees. I will not touch in further detail, but ESG, as mentioned even by Gary before, it's an integral part to our decision making, and it's what characterizes us at this stage. So our efforts are going to protecting the value for our stakeholders, and these are the difficult part. But there's also some positive in the future outlook. The portfolio is well diversified, so the risk management, it's there. The eggs are not in the old one basket. They are diversified in the US, in Croatia, and these are strong economies with strong currencies. The rebound in the leisure market is positive. We have noticed that South Africa has rebounded 1 or 2 months ahead of Botswana, but I wanted to mention it before when we were showcasing Chobe Marina Lodge. Chobe Marina Lodge is hitting very good occupancies, and going forward, I think that the season has started from July, August. We had a dip in July, but August, September are really improving to be strong. So all eyes on 2023, because it's there when we will see the realization of this rebound. Europe has been basically having the opposite issue. There was so many tourists in the whole Europe that the hospitality couldn't cope. We can't wait to be in that position next year when it's going to be our turn. So I think that this is all for this slide. We can move to the next one. Yeah, and this is a snapshot of what has been achieved in this first 6 months. It has been a journey, and it has been a very interesting and exciting and complex journey. And the first and the key focus of ours has been in aligning all the elements, all the interests, making sure that we became one team and only one team, sharing the vision, sharing the pillars of RDC and the value structure of ICC. So we have redeployed all the management from Tower into and Capital Grow into the Notuani Asset Management Company. And this has created also through the new logos and the new vibe in the presentation. We'll appreciate the difference between this presentation and the ones of a few years back. I think we are creating a very strong sense of belonging. That is the foundation for any success. Challenges are there, but as long as we are united, we can really face them and see the opportunities rather than only the problems. So we are instilling this new culture, and the culture of accountability, the culture of moving for winning, and basically the action-oriented. We have also gone through in establishing, and we will deal with this further down in the presentation, a strategy on where we are. This was the starting point, and it took some time to visit all the properties. We visited twice Croatia, and we visited each and every single property. We moved from basically 23 to 75 properties. So it took some time to go and understand the nodes, understand the buildings, the tenancies, but that is now being done. And we have evaluated each and every asset with kind of a matrix showing not only the immediate return that it would give to us as a property, but also looking into how it would develop in the years, if the node will be relevant. So a lot of consideration and input data came, and we have basically earmarked 10 properties that are not really matching what our vision is. This was very well known during the feasibility study of the acquisition of towers, so it's no surprise. Actually, it was one of the reasons of us being able to perform such acquisition, and we start disposing of few assets and or promoting new businesses, such in a building of ours that has been for quite some while not rented in the Johannesburg area. Now it's we have achieved rentals and above market rates. So this is a start of a process. It won't happen overnight. We have to make sure that we are realizing the maximum we can, and sometimes you realize the maximum simply selling a property. Sometimes you need to deploy some capital in order to stabilize it, do the works that are necessary, and reap more fruits for your shareholders. And so we will continue doing this one. The impending budget cycle will give us even more clarity on further actions. Thank you.
Right, that's back to me. Thanks very much. I'll just highlight briefly the establishment of the ESG committee, which obviously, together with the restructure and the expansion of the company earlier, we restructured the board committees as well, and the ESG committee came into being, sort of demonstrating, I guess, our commitment to responsible corporate citizenry through environment, of course, through social investment, and through corporate governance. We have 6 green-rated properties in the portfolio, including a 5-star custom hotel design certification awarded to the Radisson Red for its innovative environmental and energy efficiencies. We also have 6 solar installations in the portfolio, the performance of which is monitored by our sustainability service provider. And the committee has now tasked management with widening our greening efforts, and a portfolio-wide assessment is underway to establish where else we can harvest energy and obviously to the benefit of our stakeholders, including our tenants and ourselves in the company. Our social initiatives support primarily education, the arts, and women empowerment. We're very proud of our partnership with the Kanyisa Empowerment Trust at the Radisson Red, which is a women-led organization that supports underprivileged children. The company has always maintained a high level of governance, and this has been widely recognized by the BSC and our stakeholders. The 5 board subcommittees have been very well articulated in terms of their terms of reference and have strong leadership, and they've played a vital role in a strategic role in reporting this year. There's recently been announced a rotation of roles and new appointments, which the chairman will shortly articulate. I think we can move on. This slide really depicts some of our more recent initiatives as directed, I think, by our imperative to serve the communities within which we operate. This includes our support of the Investec Cape Town Art Fair through the sponsorship of the RDC Art for Space and Space for Art Award. Also shown is our recent Mandela Day initiative involving our Cape Town office. This was in fact paid for by contributions from our staff, and we all participated in the feeding scheme as you see it there. You'll have also noticed an evolution of our logo, which has coincided with the restructure and the expansion of the portfolio and operations. We consider ourselves to be an innovative organization that values professionalism, and I think our new look portrays these values very nicely. So going back to our roots is our ongoing multi-year support of the Ngwapa Primary School, and this year we assisted in renovating the playground. We also run an annual prize-giving ceremony at the school where we recognize and reward the best performing learners in that particular year, and you see that depicted there below. If I could invite the chairman to talk to this slide.
Gary, thank you very much. Jacopo, thank you for your contributions. I guess I welcome those that have joined us from the introduction to now. I see a number of friends and new names. This is very much appreciated. Thank you very much. From a governance point of view, as mentioned by Gary, this is part of the new process, and we've created new committees. These new committees have had, as was announced on the BSC last week, we are pleased to welcome on the board now Joanne Mavin. Joanne joins us as a CFO with the acquisition of Tower. She was for many years the CFO of Tower, and it was opportune for her to join the board as a full member before she was appointed as an alternate to Jacopo Pari. And Mark Edward left the board as his stance as an integrator between the Tower portfolio and RDC came naturally to an end. We recognize the role that Lesang Mahang has played during all these years as a lead independent director. With the appointment of Andrew Bradley as an additional member to the board of the asset manager, we thought it was opportune. The REMCO suggested to the board that it was opportune for a change of the lead independent director, and the board accepted and welcomed Andrew Bradley as a new lead independent director. And his role is basically to assist me very much in leading the business on all aspects that where I can find some help and anywhere where there is some sort of perceived conflict of interest. the chairs of the different committees. As you would have noticed, the RDC has created a number of committees, probably more than any other of the property companies listed on the BSE, essentially recognizing the fact that the portfolio is so wide, and the portfolio represents a large part of what makes us pay the banks and pay shareholders their dividends, and the performance of the portfolio is very important. We created a property subcommittee, and that is headed by Kate Mapache. And then we have an investment committee that is chaired by Andrew Bradley. We have an ESG committee chaired by Boholo Kinewendo. It is important to notice that Boholo has a role even at the UN level for the whole of coordination of ESG in Africa. So, you know, these are members that carry a lot of weight and a lot of knowledge, and bring a lot to the board in their different capacities. We have Nicola Milne. Nicola was the founder of and the founder CEO of the Green Council of South Africa, and she comes with an audit background, and she's going to chair the audit committee. So, and Lezang Mahang will chair the REMCO committee going forward. So we have welcomed all these changes, and we believe that the board has got a right composition of executives and non-executives, and we look forward to continuing this. Thank you, Avi. This was just to complete the corporate governance section.
Right. Good morning, ladies and gentlemen. I am pleased to present a very good set of results for the 6 months ending 30 June 2022. So this slide compares the results for the period to the corresponding period ending 30 June 2021. The investment and property portfolio has increased by 148% to 5.8 billion pula. This increase is due to the acquisition of the Tower portfolio on the 28th of December and the acquisition of the Radisson Red Hotel. Revenue has increased by 244% to 250 million pula as a result of the acquisition of Tower, the movement in the exchange rate, and the reduced vacancies in the group. The net asset value per share has increased by 17%. This is primarily due to the bargain purchase gain, which was realized on the acquisition of Tower, which Jacopo alluded to earlier. The bargain purchase gain of 577 million pula was recognized in the December 2021 income statement, and it arose as a result of RDC paying less for the Tower shares than the net asset value they acquired. The profit for the period is up 168% to 73 million pula, again due to the acquisition of Tower, fair value gains on the interest rate swaps, and the foreign exchange movements. The distribution per linked unit has increased by 28% from 2.72 TB to 3.49 TB. The group's maintained a loan to value of 46%. So it's management's intention to reduce the gearing over the medium term. 46% of the group's debt is hedged against interest rate fluctuations. Thanks, Avi. So moving on to the statement of comprehensive income. The increase compared to the corresponding period is mostly as a result of the 6 months worth of Tower income and expenses included in the current period. 3 days worth of Tower's income and expenses were included in the year-end results. Just to highlight a few items, the sale of the inventory and the cost of sales in the current period relate to the sale of residential units at the Old Cape Quarter. So these units are classified as inventory on the balance sheet. Other income includes the receipt of a COVID insurance claim. The surplus arising on the fair value of investments relates to the investments in the USA. The surplus on interest rate derivatives relates to the increase in the valuation of the interest rate swaps held in the Tower portfolio. The profit for the period is 73 million pula, and the profit attributable to shareholders is 59.8 million pula, 210% up from the corresponding period. The earnings per share is 7.89 TB, and the distribution per unit is 3.49 TB. Thank you. So looking at the statement of financial position, the total asset value has increased to 6 billion in the period. It's slightly down on the year-end balance, and that's as a result of the sale of the units at the Old Cape Quarter. 100% of Tower's assets and liabilities are included in the year-end balance and the June balance and not in the corresponding period. We have disclosed a contingent liability in the results. So the group is currently engaged with the South African Revenue Service on a difference in opinion with regards to the treatment of income from our Croatian operations, the tax years ending 2019 and 2020. The group claimed the foreign business establishment exemption for the income earned in Croatia, which SARS is disputing. The difference in the tax treatment has led to SARS issuing assessments of 29 million for 2019 and 14 million rand for 2020. We've engaged with legal counsel on the matter, and it's also their opinion that our treatment can successfully be defended and the probability of outflow is extremely unlikely. Our objection will be submitted to SARS on this Thursday. Thank you. And back to Gary. Thank you.
Thanks, Joanne. If I could then just touch briefly on the portfolio analysis. Here we have a simple breakdown of the portfolio geographically and by sector, in both cases by value and by revenue. RDC today, as you can see, is a well-diversified and balanced portfolio, and it's spread across 6 geographical boundaries and several more sub-regions. Clearly, the largest holding is in South Africa, as we've already noted, which is an important economic driver in the region, followed by Botswana and then Croatia. Our exposure to the euro and the dollar has created a natural hedge against currency inflation fluctuations. We are invested in all the major sectors, again creating a risk mitigating balance. And worth noting is a traditional strength of the company, and certainly part of its DNA has been our pool of in-house skills, further now enhanced by the integration of the Tower team into the asset manager. And we in fact have dedicated managers on the ground in every region within which we operate, importantly so. So it's very much a hands-on operation in spite of the fairly diverse and spread out geographical and sector-wide diversification. So this is a good news slide, and it clearly shows declining vacancies across the portfolio, with the only exception in this case being Durban. This is set not to be an exception for very much longer. I'm pleased to say we have recently signed an anchor tenant in one of our commercial buildings in a decentralized node called Berea in the Durban area, which together with the installation of a new food anchor at Link Hill Shopping Centre will very significantly reduce our vacancy rate in the region. And we are looking at, by and large, very close to a fully let portfolio in the KZN area for 2023. It will certainly revitalize that portfolio quite nicely. It is pleasing that we have managed to reduce vacancies in the Tower portfolio alone by some 22% since taking over in January, and I think a testimony to rolling up our sleeves and getting on with it on the ground in letting, certainly maintaining our tenants in terms of renewals and letting the pockets of vacant space that predominantly now in Johannesburg area, where a lot of the letting activity has taken place. So that has been a great result. Jacopo, back to you.
Thank you very much. Thank you very much, Gary. This is adding a little bit of hard figures to what the qualitative Gary was saying. From day one, after a long period of due diligence, and even during due diligence, we were acquainting ourselves with the properties. For sure, I visited Croatia. Sorry. Can you please unmute?
Can I please ask Dito Logo to mute herself? Lucy, can you please mute Dito Logo?
All right. Sorry about that. So this shows that through market rebound and an incredible effort put through by Gary and his team and all of us, we have increased the rental income. We have reduced the operating costs via tough negotiations with the service level providers, and this excluding the sales that we have performed, and I will dwell in it very soon. Shows an uptick of 29%. And there's still clearly a lot to do, but this clearly goes into the right direction, and shows that we can transform what we describe in a strategy on paper in actual results on the ground, even during clearly not an easy economical period. So in February, we managed to sell the Braids property, was earmarked for that. And we have applied the net proceeds to reducing debt. Between March and June, 16 apartments were sold in Old Cape Quarter. For this one was alluded by Joanne before. This was considered stock, and this rent 95 million again was entirely devoted to reducing the gearing in South Africa. The exact date for us coming together as a team in South Africa, in Cape Town, was in May. And as mentioned by Joanne, this is the first time that we are adding the financial performance also on the P&L side, fully reflected in the half-year results. Going forward, we will have to, you can move to the next slide, maybe. Avi? Yeah, thank you very much. So this gives a little bit of the details on what I was discussing before, and helps me in explaining what I was touching on before, on this striking the balance between growth and value. We have recognized in our accounts quite a substantial bargain purchase of 577 million, and we are disposing, as you can see, above or in line with our bank valuation. This means that we're not eroding the bargain purchase gain at this stage, but we are really realizing the economic value. We have a strategy. The budget will confirm it through all the committees and from the approval from the board. In step one, we will have to dispose certain properties which we have identified. Most of them are in the Johannesburg area. One was in is the Roots Tower, which has now been completed and sold. These properties are really not matching our criteria, and we will have to dispose them. In the medium-term horizons, 1 to 2 years, and depending on certain circumstances, we have identified a second bucket of properties that are ripe for sale. In our view, that's the right moment to dispose of the properties, improve our covenants, and have cash to redeploy in the ventures and projects that we are looking at. This is basically all on this slide, and it's a work in progress. This strategy, it's eminently meant to realize the vision that was given at the beginning, which is reducing our loan to value, reducing our bank exposure, and make sure that we are becoming significant in the nodes where we want to become significant. This slide gives us a little bit of an update on the developments and the acquisition. No real movement on the retirement homes, so it still remains at the feasibility, and business model preparation is quite a complex project. The Westlake development in Cape Town, South Africa, worth 45 million. We have discussed this one before. It's going to be anchored by checkers and clicks, and it's changing from a lifestyle to a convenience center. It's attracting a number of line shop tenants thanks to the caliber of our anchors. We are waiting for a rezoning approval, and in the meantime, all the works that can go on in coordination with the municipality and the city are being done, and no issue so far. This one was the Equanimity Wellness Clinics allows me to talk about the opportunity. When I was saying that certain properties are not ripe for sale, are the ones that have vacancies that could, through efforts and through thinking outside the box, could be filled, and such basically unlocking the real value of the property. And one example is the Upper Greystone Block B, and it was among the worst performing asset of ours, and has been converted into a wellness mental health clinic, which not only anchors the property and will add value to all the different operations that RDC has basically hosting in its properties, and create economic value, but is also something that can be replicated elsewhere. So clearly, it will start towards the end of this year. We will, as managers and asset manager, check on the performances and what value can be added, and we might be reporting, hopefully, maybe next year, an addition into our portfolio of another Equanimity Wellness Clinic. Last but not least, the David Livingstone Safari Lodge in Zambia. This it has been on our radar for quite some time. It's a complex agreement which is reaching final stages and should be executed mid of October in person in Livingstone due to some laws of Zambia. For the ones that follow us from inception, and I know there's many, we move through partnership. We value partnership, and we don't really like silent partners. We set up committees, steering committees with the partners, and we have identified a prominent Zambian partner, very well reputed businessman, is an hotelier on his own right through the Protea brand. And they are going to partner with us on this venture, which dovetails ideally with our Chobe Marina Lodge, because would allow us really to have not only synergies, but having a small circuit. Chobe Marina Lodge is currently enjoying a number of day trippers from Victoria Falls, because the Chobe River, it's the Chobe River, and all we know how beautiful it is. And possibly that could create really a value add to both the lodges. So we're looking forward to the finalization of this deal. Thank you.
Thank you all for your participation. I think this sort of concludes the formal part of the presentation, and I welcome. I see that we have a number of questions already raised. I will try to direct the questions to the individual executives, and we have with us quite a number of our asset managers and some of the senior team are present, so I will welcome their own contributions too. I will just start with a question raised by one of our guests. The first question: in which country or countries and sector are the 10 properties identified for disposal? What is the expected disposal value and intent use of the proceeds? I'll leave it to maybe Gary to discuss that, as it is portfolio related.
Thanks, Chairman. Yeah, indeed, that's a very good question. We've recently been to the investment committee for approval for the disposal of a total of some 300 million rand pooler of property, but in two different baskets, if you want to call it that, or scenarios. In the first place, scenario one are properties that are ready for sale or otherwise some deals have been concluded on these properties. And all of those properties, barring one, which is in Botswana, reside in the Johannesburg portfolio, which was previously the Tower portfolio in Johannesburg. So there's quite a lot of work done in Johannesburg around readying properties that are not showing or are non-core to ourselves or not showing any further value for sale to the market. And I think it's important to note that, and it has been mentioned, but we don't intend to dispose of properties below the book value, which means that we will fully realize our bargain purchase gain that was established and with the original purchase of the portfolio in December last year. So that's an important thing to note, and I think we've managed to achieve that thus far with some of the smaller properties that have been sold off, and that will continue to be our strategy in that regard. As to scenario 2, that really is about properties that include some of the older properties in the Botswana portfolio, and that really is about properties that we see within the medium term, 1 to 2 year horizon, will be ready for sale, and within the same parameters that I've just mentioned. How do we redeploy those funds? We'd like to reduce our debt, as we've already mentioned. So clearly there will be a release value on some of the mortgages on those properties in and around the 50% mark, 45 to 50% mark. And we may even deploy more than that into reducing debt in the short term, so that we can get rid of some of the expensive debt that we've had to take on in the purchase of the Tower portfolio originally. And then clearly we will also be redeploying some funds back into the portfolio to create where we see fit to create higher yielding properties or enhance the yields on the properties that we do see as core to the portfolio. I trust that answers that. I'll just speak briefly to the second question, which is specifically about Gauteng and the vacancies, and particularly in the Sandton area. I think that came from Quirk. We've reduced, and to some degree, it's against the odds, because as we know, Johannesburg has been a very, very difficult market, arguably a lot more so than Cape Town, where by and large, at least the former Tower portfolio is fully let in Cape Town. But Johannesburg not so, although we have managed to reduce, even in the last few months from April, the vacancy rate in Johannesburg was 27%, it's now sitting at some 23%, so heading, I think, quite nicely in the right direction. Fortunately, we're not heavily exposed in the Sandton market per se. Jacopo did mention a collection of really well-appointed officers in that, which is our major holding in Sandton, in the Sandton area, where we've just let out to a wellness clinic, and that has reduced the vacancy on that cluster of offices quite nicely. So yes, I do agree that Sandton is, if you have a look at vacancies across the Johannesburg area, Sandton's one of the highest. As I said, fortunately not heavily exposed in that particular area.
Gary, maybe you should just cover up the third question of Leano, which is what sort of rental reversion and lease periods are we looking at in South Africa and Botswana, so that we conclude sort of the questions that are portfolio related.
Yeah, again, very much driven by the geography. I'd have to admit there have been rental reversions in certain of the areas, particularly in the Johannesburg market. I would say up to about 10% in certain cases, maybe 1 or 2% beyond that. We haven't seen that in Cape Town market. We've seen a little bit of a stagnation, certainly, maybe not the growth, but we haven't seen major reversions in that area. So we're pleased to sort of be holding the line in areas where clearly there's a little bit more growth to speak of.
In Botswana, maybe Uzoma can tell us what the situation is in Botswana.
Thanks, Mr. Chair.
In Botswana, the rentals are a bit flat at the moment. Although we witnessed a little bit of a reversion of about 7.1% on the new leases and rentals that we recently signed, primarily due to leases that have escalated beyond acceptable market rates. But rentals remain flat and a bit resilient in the market, especially with the retail and industrial sectors.
Okay, thank you very much. I see there was a question still pertaining to the portfolio, or at least linked to the revenue that we generate through the portfolio, which is a question of Leano, based on what is the occupancies across the Botswana hospitality assets. Jacopo, can you please respond to that one, as that's part of your...
Yes, thank you very much, Mr. Chairman, and thank you, Leano, for the question. As mentioned before, the year started with the Omicron pandemic, so the first 3 months were really tough in Botswana. But from there, we have witnessed a growth in occupancies, and I will give you some exact figures. The Protea by Marriott Hotel in Gaborone has hovered around the 40% mark up to August. So basically, up to then, we were a little bit behind the curve of South Africa, which started picking up immediately in June and especially in July. While for South Africa, July was a great month. For Botswana, July and August were the last inverted comma bad months. From September, we are hitting eventually, I would say, the 62% occupancy level, which is a great result. You have to consider that corporate are traveling in a different manner, so staying over the weekend, it's still a little bit depressed. So it means that, and its actual effect, that in certain weeks, and especially my favorite week in mid of September, between the 12th and the 19th, we were fully booked at Massa. So that's a very good news. Chobe Marina Lodge, it's a little bit of a different story, but still has witnessed a dip in July. But the peak season starting basically from May is well above the 55% occupancies, and September is looking north of 60%, with rates that are clearly incredibly higher than I'm talking about 100% higher than what we achieved in 2021, but are still a little bit shy of 2019, which is a benchmark pre-COVID. But again, like we mentioned, if the trend is positive, we witness growth both in occupancy and rates, and in a consistent manner. And though it is still quite a cutthroat industry, this is a consolidation of the rebound that we were looking. And again, to me, the 2023 is gonna be the year of getting back to where we were. I hope, Leano, that I am answering your question.
Yeah.
Thank you.
Jacopo, maybe I will then take over on the loan to value targets, and then I will leave it to Joanne to respond to the very technical questions on the financials. On the loan to value, I think the principle here is that we ask the shareholders an exception to go up for the acquisition of the tower portfolio. As we've seen, the effect is very significant. It's a landmark in our history, and I think what we are looking at is, if we were to be able to enact our scenario 1 and scenario 2, we'd see this loan to value going down from 46 to roughly 44, and then 43. So getting down to our ideal situation of around 40% or slightly lower than 40. Clearly, we have to balance between loan to value, our ICR, and and the next element is reinvesting in new properties and that fit into their strategy. And so there is a very significant model that we're working on in defining this balance between going from a growth strategy to a value strategy. And I guess this is what we are working on with the investment committee, and the whole executives are working towards realizing this value within the next 2-3 years. Clearly, we knew that this acquisition gave us a lot of opportunities because there was a lot of work cut out for us, and we are heads down, and that's what we're trying to show during this presentation, is that we are heads down working towards this realization of the optimal portfolio. I leave it to Joanne maybe to respond to those more specific questions. Joanne, would you like to take them?
Sure. I see the first question is how much debt is maturing in 2022 for which rollover agreements have not been signed. So we have agreed with the respective banks to roll over all the expiring debt for December. There's no risk there. We have the corporate bond, which expires early December. We have tested the market and there's appetite for us to issue a new bond to replace that bond. So all our debt should be able to be rolled over. The next question is the surplus arising on the fair valuation of the interest rate derivatives realized or unrealized? It's unrealized. We revalue it every month with the movement taken to the income statement. So for the last 6 months, the overall movement is based on the valuation as of the 30th of June. It will be revalued again for our year-end results. And that valuation is determined by the interest rate curve and the length of the derivative.
Thanks.
Pleasure.
Mr. Chair, shall I deal with the most recent question regarding lease expiries?
Yeah, please do.
Thank you. Yeah, so I can't actually share the lease expiry profile, but I can certainly provide that after the meeting. Typically, though, we are not seeing lengthy lease terms unless it is an anchor tenant, for instance, where we're installing Oxford Foods at Link Hills on a 10-year lease, that type of thing. But beyond that, you're looking at your typical 3, maybe a 5-year lease in the commercial sector, but not longer than that. In fact, in certain cases, tenants are holding us to shorter terms, and we're having to accept that as part of the new way of doing business. People moving to a more flexible, flexi work environment, and we have to be flexible in staying ahead of that and providing the market what they are looking for. So whereas I know I've been around in the industry for more than 3 decades, we've come from a position where we've taken a lot of security out of lengthy lease terms. We're having to be a lot more flexible in that age, if you want to call it that. And in terms of escalations, it's a very good question. We've done an analysis of our escalations. Depending on the sector, but of course, retail, we're finding the escalations a little stronger, and offices dipped a bit. In fact, I've come back a little bit in the Cape Town area to around 8.5% that we're receiving between, and that we had to compromise on that a bit in COVID times, but we found the market has come back. One of the things that we recognized is, especially given this inflationary environment that we're dealing with, and for the first time in Europe, in probably living memory for a lot of people, they're dealing with inflation. So it becomes very pertinent in that market. And that is to move as a policy to CPI-linked leases, so escalations. So typically we would want to say CPI plus 2% as a benchmark for agreeing an escalation with the tenant, which obviously protects us against inflationary pressures, and also provides us with some growth beyond that.
Thank you very much. There was some, let's take these last few questions maybe. There was a question from Bakwena. So we've responded to that one. I think there is one. What are your key debt covenants and whether it complied with over the 6 months?
I can answer that. Yes,
Yeah.
our key debt covenants, which we'll monitor the covenants in terms of every facility, but in general, they're mostly your loan to value. And the ICR, there are different ICR requirements in terms of the various facilities. I think probably the strictest is the 2 times for the entire portfolio. And yes, we have met all our covenants for the 6 months.
Yeah, thank you very much. I guess this concludes the any other question. If you have a question, we are always we're available for any question, and we are happy to receive your comments and receive some feedback. I would like to thank you all for participating, and I thank all my colleagues and the fellow directors on the board that have joined us during this presentation. Thank you very much all for participating. There is a question I see on the interest rate swaps. I wasn't answered. Do you want to take this question, the last one then?
Yes, sure. So the instruments are fixed. There are fixed interest rate swaps. We have most of them are in South Africa and some in Croatia. The South African swaps are linked to the JIBAR, so we fixed the JIBAR rate. And in Croatia, we fixed the 3-month Euribor rate. So they're all very vanilla interest rate swaps that we have. And our overall strategy is, we would like to ideally be hedged in a market that we're in at the moment, but it's not the market to extend your hedges now, they're just too expensive. So we're constantly in communication with the banks. We've done a few blend and extends to our current swaps to extend the period of the swaps, and we'll look for new opportunities going forward. And yes, we'd like to also capitalize where the rates start improving.
Okay, thanks, Joanne. I hope we've answered all the questions. However, as I was mentioning before, if you have any questions, you can always feel free to send an email to Avi or to any of the executives, and we'll answer them very clearly. Thank you very much, everybody, for participating, and I hope you found the presentation interesting. Have a really good day forward. Thank you all.
Thanks, everybody.